Okay, good morning, good afternoon, and good evening to everyone around the globe. And thank you all for taking the time to join us for today's webinar, How Banks Are Helping Customers During the COVID-19 Pandemic. My name is Karen Redfern, and I'd like to welcome you all and just cover a few housekeeping items. Today's presentation is being recorded. The recording will be made available for replay for those who are not able to attend today's live session. If you object to participating in a recorded session, you may disconnect from the webinar at this time. The recorded link will be distributed tomorrow via email, and you may listen to the replay at your convenience. All phone lines are muted during the webinar, but questions may be submitted at any time through the Q&A feature at the bottom of your screen. Please use the Q&A feature to send your questions to all panelists. At the conclusion of the session, we will have 3 quick survey questions for you as well. So if you could please take the time to answer the survey questions, your feedback is appreciated. Today's presentation will be led by our Chief Marketing Officer, Devin Watson. And Devin is joined by our guest speaker, Peter Wannemacher, Principal Analyst with Forrester. Welcome, Devin and Peter. And now I turn the presentation over to you, Devin.
Thank you, Karen. And thank you, everybody, for joining us today. We're going to step through a few things that I really hope will help us all navigate this unprecedented situation. We'll cover how many financial institutions are responding to the coronavirus, some of the best practices that are emerging, some of the impacts on long-term strategies, and then finish with some guidance and recommendations, as well as a Q&A. Slide, please. I'll keep my comments brief, as we're very fortunate to have Peter Wannemacher with us. Peter thinks very deeply about the trends in banking, and I really think his insights are going to help us all navigate this. Since the start of this pandemic, we've all seen some really serious challenges to essential local services. When I think about the access to banking services, credit union services, fuel, grocery, pharmacy locations, all of these things have become even more mission critical, and self-service and digital automation has been pushed even more to the forefront. At Diebold Nixdorf, we've really had to reorient our entire company around our mission right now, which is connecting people to critical services where and when they need. So early on, we took steps to protect our people, just like every other company did, but also to protect our clients and the communities we serve. Things like work from home, things like changes to manufacturing process, things like changes to standard operating procedure for technicians, right? Disinfecting serviced machines in the field, helping to do the right thing for the communities. And I've been very, very proud of how I've seen that all come together. But that's what's happening right now. I think we all need to start to think about what happens next. Banking in general, self-service and digital automation in particular are certainly going to change. And the way we all navigate this, especially how we communicate during the crisis, I think will shape that change. And that's what we'll dig into today. I've heard a lot of amazing stories from our clients. I'm sure you have as well. And I'm convinced that during this time period, we're actually strengthening relationships, both between providers and customers. And I think we can all help each other get through this in the best way possible. And that's why I'm very pleased to turn the floor over to Peter Wannemacher from Forrester Research. Peter, the floor is yours.
And some of the insights hi, I think I might have been muted for a moment there, but thank you very much, Devin. Thank you to Diebold Nixdorf for having me, and all of you for being here. So we're gonna talk through a few areas. We're gonna talk about how consumers are, and this is changing by the day, if not by the hour, but how consumers are reacting, and a little bit how banks are reacting. And then we do want to go a little bit deeper and start to think about how this affects banking strategies and the way that banks help customers serve customers in the long term. A lot of this is early findings, right? I've said to a few folks as we've been building this that a lot of the research we're sharing with you today, Forrester wouldn't normally share for a few weeks, not just to hold it, but to go through and do a little more analysis, create a sort of more rigid methodology from a -2 to 2 scale for various benchmarking. We've done our best to quantify our findings here and to provide the best guidance, but we're operating the assumption that the value here is as close to real-time research insights as we can give you, and then the guidance based on what we do know, even though there are, of course, a lot of unknowns and a lot of yet-to-be-knowns. So I'm going to jump right into what consumers are thinking. So people are more pessimistic now than they were in 2008, but in case that's not clear to you, I'm sure everyone on the call remembers, but this was the Great Recession, right? The last really full-scale economic shock, obviously not a pandemic, and that could have some influence, right? Consumer sentiment is a complex and very noisy space. Survey data is always a little noisy, but the bottom line here is people are very worried, and people's views around the economy and their own finances, of course, impacts their perceptions, their attitudes, their decisions, and their actions. And specifically, it really affects their financial decisions and actions. We'll get to, right now, we're not seeing that besides, decrease in spending and changes, of course, to a lot more card not present because, of course, they're hunkered down at home. But we'll talk about what that looks like from a financial behavior standpoint in a few slides. But this is the most important sort of context slide in my view. And I think it's, to add a little more, if we go to the next slide, this changed really borderline overnight. Now, my background, I came to Forrester as a data scientist. My background is in survey data and analysis of survey data. Survey data is always a little noisy. These are two different surveys. So even though it's the same exact question, you should always be careful, right? So take this with a grain of salt. That said, I think this is pretty accurate. People really abruptly went from either not worried or very kind of sort of cautious concern to real pessimism that took hold. Again, it's mixed in, right? There's some multicollinearity here with fears about their health, their safety, their loved ones, but it's clearly affecting their view of their finances, their money, and that will in turn affect their banking actions, their banking decisions, and their relationship with you as a bank or as another kind of company or provider in this space. When we look at what people are doing, if you go to the next slide, now I want to be cautious because again, so this is very recent data, right? So Forrester captured this from this is our consumer voices methodology. So it is not a huge sample size, right? It's unlike our surveys, it's a smaller sample size. It's much more open-ended. I still think it's very useful because it gives you a sense of what people are thinking. And by the way, it's still a large sample. I don't remember, a couple hundred people are in this in general. This obviously is just some pull quotes and some themes we pulled out of here. But I think it's very telling. When we look at consumer voices and we look at some other research we have, the vast majority of consumers, of bank customers, because most consumers are bank customers, are, for lack of a better word, hunkering down financially, even as they hunker down physically and sort of shelter in place in some cases. So this is what we're seeing. Most folks are sort of taking a, for lack of a better word, wait and see approach to this. So that said, I'll make one more comment here, which is we expect even this to change. So we don't expect, a run on the banks. We have seen some increase in large cash withdrawals, but that's probably driven by other behaviors, not a sort of traditional bank run on the banks. And of course, most developed markets have FDIC, like the U.S. has, or something equivalent. So we're not seeing that, but we do expect to have some long-term changes, which we'll talk about as we go forward in this presentation. So let's talk about how the banks are responding. So Forrester has, and if you go to the next slide, I'll jump right into this. Thank you very much. So Forrester has been collecting, monitoring, and analyzing, at this point, well over 300 pieces of digital communication or content from banks. We'll get to a little bit later some actions and initiatives that banks are taking, but this is often a good guide to how banks are responding. And certainly, please feel free to reach out to Diebold Nixdorf or to us directly if you want to see some more of this. But I want to pull out a couple things that I think really tell you and illustrate what's happening when it comes to banks and their early responses and how those responses are starting to change. So as you can see in the headline here, our view is that banks largely missed the mark early, and that's in a couple ways. I'm zeroing in on just one way here. But when we look at early communication, so March 11th is when the World Health Organization declared COVID-19, this particular form of coronavirus, a global pandemic. So we looked at, it was essentially evident that it would be a global pandemic, or that would be declared a global pandemic, that it was a global pandemic just a little bit before that. So March 10th is where we look at. So we look at the first week on the left-hand side, and then the week after that, actually a little bit more than that, on the right-hand side. And what we found was that early on, most banks were prioritizing branch visits, discussion around branch safety over digital self-service and other mechanisms, right? It's not just digital, it's phone, et cetera. So this is binary, obviously. There's a more nuanced look at this, but we did our best to sort of quantify this. And that was, I think that was a mistake for a number of reasons. Now, I want to be careful here. This data, we did not ding banks for keeping their branches open. Certainly some in Europe and in lots of markets were legally bound to keep their branches open. We heard of that. We heard that from many executives in Europe especially. And also, there's nothing wrong with reassuring customers that if they come into the branch that you're doing you're being extra careful to abide by, all the guidelines and keeping things safe and increased hand sanitizer and all that stuff. That's good. What we're looking at here is whether or not they made that more prominent than other ways they could help customers. And there was a shift. So you see that moving from the left-hand side to the right-hand side. At this point, it's 2/3 of, I shouldn't say at this point, after that, at this point, it's basically around the same right now. So this is a quantified look. But after that, it started to shift significantly. And at this point, it's been pretty steady for the last, since March 18th since March 18th. About 2/3 are prioritizing digital self-service. So and we believe that is a best practice. There, of course, are big questions around, have you done enough work, you, the banks, you as a bank, to enable digital self-service for all or virtually all task flows? Have you enabled people to complete their objectives and get reassurance through digital channels? That's a question that we'll deal with as we move further into this presentation, but that's something we're seeing. If you go to the next slide, there's one other view I want to show you, one other attribute of how banks are responding that I think is very telling and illustrates. So we looked at, for lack of a better word, empathy. And quickly, just to expose a little bit about how I did this, how we did this as a team. So my colleague, Gina Ball-Walker, who is an expert in customer experience, works in our customer experience team and an expert in digital experiences. She and I looked through 10 different emails, and she gave me guidance on sort of what to look for and what are indicators based on a mountain of research around customer experience, around communicating with customers, about acknowledging customers' anxiety. And what we saw was that early on, most communications and content, and remember, this is emails, sometimes it's web content, sometimes it's text messages even, sometimes it is in-app alerts, messages, or content, to a wide range of stuff here. We found the majority were lacking prominent customer empathy. That did start to shift. So if you look after March 18, after the first week, we started to see that now it's about 60%. That's good. Still, though, 4 out of 10 banks are, underemphasizing that, or not making that the first most prominent. And again, I'll make a quick methodology point here, which is we are not dinging banks. Banks are not in the light green here for saying something like, thank you for being a valuable customer. There's nothing wrong with communicating something beyond just the customer's anxiety. What we're looking at is the prominence and emphasis of acknowledging their anxiety, of empathy, and trying to help. Customers are worried. They want to understand what this means for them and what it means for their money, their financial institution, and what options are available to them. So we're seeing this shift happen. And the goal here is not to tisk banks. We work with lots of different banks. Diebold Nixdorf works with lots of different banks, and all of you, of course, are at a lot of banks or work with banks. I know that every bank I work with is doing their best to try to support customers at this time. The question is how you're acting, what initiatives you're putting in place, and then how you're communicating those initiatives. So when we look at best practices, and we're going to get into a few of those here. So if you go to the next slide, one of the ones is, yes, presentation and design matters. And what we're talking about here is not how pretty your email or your website is. Prettiness is not the factor we're looking at. What we're saying is, if you're doing taking various actions, putting in place various initiatives to help support customers during this pandemic, if you're doing that, but they are not easily able to consume and understand what actions you're taking and what they can do, then it doesn't matter. Your best efforts will fall short if they can't easily, for lack of a better word, consume, digest that information. These are two best practices. None of the slides in this deck are worst practices. That's not typically what we want to focus on at Forrester. But also, especially in these times, right? The goal is not to say, look how bad this bank was. So these are two good examples. One from Citizens Bank on the left, one from Santander. We could talk about some nuance. There's some different choices each have made. But on the left-hand side, you see clear headings that are action-oriented, right? What we're doing, what you can do, clear guidance, bulleted lists, etc. On the right-hand side, right, very clear messaging, headers. These are not the two absolute best. I've seen most banks are doing an okay to good job here. But we do think this is a best practice and one that this will not change. I mean, it'll be months before you can stop communicating to customers about how you can help them. We talk about frequency on a separate topic, but you want to be making sure that they can understand and be reassured as much as possible by the actions you're taking. So one quick note on this, if you go to the next slide, one thing that we've seen very few banks or financial service companies doing is using video or multimedia. And again, this is not because video is cool. We know we have an entire research stream looking at video and multimedia experiences in financial services. Video is not as good as being in person with a branch advisor or whoever, loan officer, relationship manager, et cetera. But you can't do that right now, or at least most of the time you can't do that. And video is clearly, for most people, better. That is, they prefer it, and or it is more reassuring, it has more emotional impact than text on a screen. So I don't think you need to turn everything into a video, but, and I'll give you a quick glimpse of our data here, over 90% of the banks we're tracking are not using any kind of video or multimedia capabilities to help customers understand what they're doing, what's going on, what they're doing, and what the customer can do about it. So this is from Eastern Bank, right? A mutual bank in Massachusetts. They delivered this video. It's less than 2 minutes and 30 seconds, which is ideal if you're going to do video. With a few exceptions, you want to be under 2 minutes or just over 2 minutes. They deliver this through multiple channels and platforms. On this, we're looking at it at Twitter. But this is something we want to see more firms ramping up. And it doesn't need to be beautiful. It needs to be effective. So let's talk a little bit about some of the actions we're seeing banks do. If you want to go to the next slide. Thank you very much. This is not an exhaustive list. It is not an exhaustive list of actions and initiatives, and more importantly, it is definitely not an exhaustive list of which banks we're looking at here or which banks have rolled these out. I did not think it was worth anyone's time for me to show every single bank that has either done this or that we know is planning on doing this. So on the top here is the closing branch lobby. So this varies a lot by geography. And of course, what I mean is where the pandemic is most severe, where government entities have either locked down communities or put in place, guidance, strong guidance around gatherings, et cetera. We've seen a big shift. So many have closed branch lobbies, so you have to do by appointment, or some have closed branches. Then the next few are very close to each other, but are distinct. And the bankers in the audience, I'm sure, know this very well, but I want to distinguish them a little bit. So deferring payments, pausing evictions, foreclosures, waiving fees. So another example in here that's not in this list is USAA has, and I don't think we have this example in here anymore, but USAA has cut their wealth management fees in half. For people that want to, that are concerned and want to start maybe looking at that as an opportunity. I think most won't take them up, right? We showed you data earlier. I think most people are still waiting and seeing, but that sort of offering is going to be helpful. Certainly, we've seen that from Citi, Marcus, quite a few others. Offering crisis-based loans and credit line increases. So some of these, of course, are through the government stimulus, right? I think it's called the CARES Act. So you may have seen news, Bank of America was the first large bank that said they could roll that out. That's not included here for small business, but this also includes consumer loans, lines of credit, et cetera. So those four are the most acute actions we're seeing. Some firms are enabling them through digital self-service. Some are, of course, still requiring phone calls. That's actually the vast majority are still requiring that. That is understandable, but it is based on the fact that the bank wasn't able to stand up that offering through a digital mechanism fast enough. Again, understandable, right? The goal here is not to tisk, but to talk about what we're seeing and how fast that'll change. And we are seeing the most dynamic firms, the firms that are most agile or adaptable. Those are the firms that are able to stand up, the service, the action, the initiative, the new product in some cases, and enable it through digital channels, through self-service, et cetera. Or in some cases through even branch, of course, that's even if it's through call center or branch, I should say. Developing specialized digital content. So we're going to talk about this a little. I won't go into it right now, but this is really a cousin to the comments I was making a few minutes ago on the best practices. If you're doing the work to help customers through this crisis, you should be, for their sake and yours, helping them understand what actions you're taking, helping them understand what's happening with their money, with the finances, and in some cases with the economy. That varies a little bit by what the brand is and what the product or sub-industry is. Work from home, so we're seeing this from a few firms. This is not something you can stand up easily. The firms that we've seen been able to do this, most of them already had some form or had some level of work from home for contact center representatives, and we're able to expand that. Supporting employees. So this is one we're going to show you an example of in a little bit, but employee experience is something Forrester has been emphasizing for years. We've been ramping that up because our research shows that it's really important. And then the last one is one that is very much dependent on what role you play, but it is secondary in the eyes of customers. But that's helping them get refunds from, for example, airlines, right? There are firms like Monzo that are helping customers identify and take action on refunds they deserve, that they want and or deserve or need. That's, again, far more important is the more direct relationship aspects of your relationship, but that's one that we're seeing increase, and we think will increase. So if you go to the next slide, we're seeing smaller firms are taking swift action, right? So many of the examples I'm showing you are from either big firms or from, challenger banks, from digital first firms. I've mentioned USAA, but we see no evidence that the smaller firms are, so in some areas we've seen smaller firms are struggling to stand up, for instance, digital self-service, but smaller firms, community banks, credit unions, this is from a credit union, are absolutely acting and are taking bold steps to put in place initiatives and services that help their members, their customers, et cetera. So this is just one example, Skip-a-Pays, community assistance loans, et cetera, really aligns with some of the things we've seen otherwise. Another best practice we've seen is one that we've touched on, but I want to get a little more explicit, which is prioritizing digital self-service. So if you go to the next slide. So Ally does this really well. Yes, Ally has no branches, but they have really robust contact us, right? So they actually offer a wait time. And yet what Ally chose to do in its digital communications, both in its website, app, and email content, is emphasize digital self-service first and foremost. In addition to doing a pretty good job of empathizing and acknowledging the customer anxiety and the emotional impact of this pandemic. So that's one example. We have another example on the next slide from a third-party fintech firm, Emma. So, it looks a little different, right? This is their brand identity is very different, their brand personality. But again, when you open their app, and this is something important, we've been, Forrester has been urging financial services companies for years to think about notifications, alerts, and messaging as really one of the most important tools and mechanisms you have for engaging customers. Too few banks have done this, which is putting messaging front and center when you log into an app experience. So I won't go through each of these for you, but they're offering some guidance. Yes, it has emojis because that's who they are, but they're saying, hey, listen, we're here to help you. Here are some actions you can take through digital self-service that we can support you with. One more example, an example now from content. So TD Bank, and this again, my colleague Gina Walker, who's brilliant when it comes to customer experience and digital customer experience. TD Bank is not alone in doing this quite well, but they did this really well. They stood up really quickly, standalone page on their website. It's evident in other channels and touch points as well. And they said, listen, we're worried about you, or we have your back. And when you see the most prominent part of this, of course, are the quick links. And rather than sending people to call centers that might be overcrowded or soon might need to close, or at least be depleted in representative number, they're focused on, listen, do you want to know real-time information about store closures, digital self-service, mobile and online banking, and then FAQs related specifically to this crisis. So really good. I mean, there's nothing brilliant. I mean, there's nothing magical about this, but a really nice, clean presentation of digital content to reassure customers and help them take action in a time of crisis. And then one more from the same area, from same best practice, but a different brand, Marcus by Goldman Sachs. And we've emphasized here two highlights, or one call-out box and one highlight, to talk about the fact that they've zeroed in on the employees and the impact of helping and supporting their employees on their end user customers. So first of all, they include customers and employees when they say that we're looking at how this impacts you, not just the customer, but also employees. Forrester has a wealth of data showing that employee experience matters to employees, but also to customers. And then a little further down, you can see the highlight. We've made arrangements for our contact center to be able to serve you while adopting social distancing and, most importantly, being explicit here, working from home. So that ability to emphasize, and yes, this is based on they had to take the initiative to do that and then communicate that support, communicate that initiative to customers clearly, and I think pretty well. So now we're going to change gears a little bit here, and we're going to talk a little bit more about what we're seeing in terms of banks' response to this pandemic in a more medium-term, longer-term sense. So everything has near-term implications in the face of this pandemic. But this is some research Forrester had done previously. So this is not perfect, right? This is based on conversations and data we're getting from bank executives, digital banking teams, et cetera. We could quibble with whether or not these are exactly right. More than happy to have that conversation. But these are broadly, and one important note here, these are areas of initiatives. These are not individual initiatives in most cases. So AI covers a broad range of initiatives, from machine learning algorithms to much bigger AI-based initiatives, or very specific implementations, right? So AI, not small, but specific things like AI for fraud, risk, et cetera. Certainly RPA around compliance. So these are categories. We think this is going to change, and I have done, and I want to be careful. I'm going to show you the next slide in just a moment, or the build on this slide in just a moment. But this is me and my team making some from the hip predictions about how we think this will change in banking. So if you move forward, please. We identified a few of these that we think will increase in priority over the next few months, but also we think for the next, let's say, 18 months or so, and a few that will decrease in priority. It's going to vary by brand, right? So there are some firms for whom their platform strategy is so essential to their long-term goals, and they might, they still have the resources to pursue that. They're going to continue doing that. But broadly speaking, this is how we think things are going to shift. We don't have time to talk through every single one of these, but data we're going to talk about as we go on. We're going to show you a slide later, I think one of our last slides here. Data has the potential, data has already been important, right? Data is the new oil is the thing you hear every day. And the reason you hear it every day is because there's some truth to it, or at least there is some truth to the analogy of it, right? It's obviously not exactly right, but it's a telling metaphor. Data has the potential in the face of this crisis to be the most important factor in, or one of the most, I think I would cite dynamism, agility to be the other one, but one of the most important factors in banks' near-term and medium-term success. And I'm going to talk about what we see as a potential sort of virtuous cycle. It sounds strange to call anything a virtuous cycle in this current, in these days, but we do. We think that data can be valuable to you serving customers in the near term, and ultimately could have a win-win for banks, for companies, for financial services companies, and for their customers. We'll talk through that for a little bit. In the near term, we're going to see some things like digital money management, still important. We're definitely not going to see it disappear, but it will be deprioritized relative to things like ensuring that you have digital services for your retail and business clients, customers. So I want to go a little bit further on some of this and talk through some specific initiatives or some specific implications in the longer term. So if you go to the next slide, we believe that the contact us experience will improve. We think it already needed to improve, right? I imagine everyone on this call has at some point had a terrible contact us experience. I hope it was with another brand, not the one you work for, but it might have even been your own organization. In these darker days, we're going to see this be really important and have acute impact on customers' experience and their emotions and their brand perception. And even in the longer term, we're going to say this. So a couple of things we believe will need to be important. Designing clear, prominent one-click options for phone or branch visits. Obviously, in the very near term, for some geographies, it's not going to be a branch visit. It's going to be, in some cases, a video chat, et cetera, but we're seeing that. But being able to, supporting the customer, enabling the customer to, with one click, easily understand what action they need to take, and then with one click, taking that action to get connected to a human being is going to be increasingly important. Number two, in the middle one here, asynchronous two-way messaging. So that's a long term, but it's really important. Almost every bank we work, I think I'd say every large bank we work with, and maybe even every bank we work with, has some form of secure messaging, right? 20 years ago, there was secure email on banks' websites. But the ability for a customer, and as a quick sort of couple of brands that are doing this really well, American Express, Discover, have built this in just the last couple of years, where you can communicate with a person, with a representative, or in some cases a virtual assistant, but more often a human. Do so through chat, but do so in a way that doesn't require you to sit on that chat on the app or on the website in real time. And if you go away and go check your fantasy football, or go out and get your groceries that got delivered because you don't want to go to the grocery store anymore, you come back and it says chat has ended, right? That's a terrible experience for customers. So we're seeing a lot of firms build what we call asynchronous two-way messaging within digital touchpoints. And yes, mobile is the more important, the more urgent space for a number of reasons I won't get into in terms of segmentation and where we see consumers over-index, or which segments over-index. And last one is leveling up, and it's not last, but definitely not least, is leveling up your alerts and notifications experience. What you want is to help customers achieve their goals, complete their objectives, and in some cases just complete a relatively simple task through notifications and alerts, right? The most obvious example of this is one that a few firms like Capital One and Bank of America have done a good job of, which is fraud, right, or potential fraud. Is this you? Yes or no? Through an alert, an email, in-app alert, a push notification, and quickly take action on it, or even a text message. If you go to the next slide, you can see a good example of this comes from Santander. So this is the Santander European arm, or arms of Santander. Santander does a really good job of helping customers through, yes, design, but also the functionality, move to phone, email, or messaging, or even chat, to get additional help or advice. So they've done this really, really well. There are still some quibbles, of course, with aspects of the UX design. That's true for every bank I've ever looked at in history. But Banco Santander is absolutely a leader here, and that's going to help them in the near term, and I believe in the longer term. At the heart one more example from digital self-service. Apologies. One more slide, if you don't mind. So this is from Bank of America. So before this crisis, Forrester identified card management, and there's an adjacent service that we broadly call data management, which is far less mature. But card management was the most fast-moving, or I'll explain what I mean by that, fast-moving in terms of importance to customers and to their experience, even if they don't explicitly say so, right? It sometimes was a latent demand, was the most fast-moving in terms of importance digital capability or service we were seeing in at least US and Canada. And from working with my colleagues in Europe and Asia Pac, I think there's a fair amount of evidence that that's true in those markets as well. So this is just one example, right? This is Bank of America makes it pretty easy to replace a card, pause it, lock your card, right? Discover was the first to really innovate here with their freeze tool. But we will see digital self-service features be prioritized and take center stage on banks' roadmaps, and that's going to change dramatically, and the impact on customers' lives. So when we talk about all of this, if you go to the next slide, data, yeah, I mean, this is something you hear a lot because it's true. Data is at the center of your ability to offer automation, better advice, next generation personalized services, insights, and that can be insights that are, in the graphic we're showing here, it's insights that are banker, right, employee-facing, bank-facing, but also some that you expose to the end user. Data sits at the center of this. And firms, of course, need to have their own data strategy in place and a wide array of efforts around their data infrastructure. I mean, when we talk about data, we are not just talking about the ones and zeros that sit somewhere on your on-premise servers. We're talking about all the infrastructure, all the processes that enable you to not just hoover up and collect data, not to just hold it and keep it safe, which is important, but to take action on it in a way that helps customers and improves your own business outcomes. And here, the good news for you as a bank or as a financial service company is you have great partners, right? So Diebold Nixdorf is one of those, but there are a number of vendors there that are able to support you as you try to think about the role data plays for automation, for advice, and for customer self-service. And that's really important, and it's one that will not change overnight. It will not change as fast as customer sentiment or consumer sentiment did in this crisis, but it will need to change, and it will be essential to your near-term and longer-term strategies in the face of this pandemic. And if you don't mind going forward one more slide, so I want to make this point, and this is actually everyone who's in this audience, this is the first time we're showing this. There's a magic to this slide, but this is a hypothesis Forrester has. We have not done enough research for me to say conclusively this is the case or will be the case. But I want to put this out there because I think it's really important to acknowledge, and because I firmly believe this hypothesis may well prove to be true. And if it does prove to be true, it'll be essential to success or failure of many a financial services company. Or I should say growth or lack of growth. Failure is a different term in financial services, so that could happen. Your actions now could enable you to certainly help customers, support customers through this crisis or future crises, which will then drive deeper relationships and loyalty. And the metrics we have around this are typically things like frequency of login or monthly active users or cross-sell rates or number of products owned. Those are not terrible indicators. They're useful indicators. But I'm talking about a deeper relationship, a sense of the role you play in that customer's life, will deepen or can deepen. As a result, and this is one we've only just started to look at, the customer will then trust that bank brand with more of her data. And this has big implications because, of course, there's a separate set of factors, right? And I'm talking about regulation, right? So the California Privacy Act is the most prominent in the U.S. Certainly open banking initiatives around the world are an example of this. But as consumers have more say in who has access, control, usage of data about them, I won't get into ownership right now, the sort of philosophical question. It will be important for you to demonstrate that you're on their side, that you're helping them through this crisis, so that they'll want to, or at least be willing to share more of their data, with you, And there will be tools, right? So firms like Chase have offered some level, most are still very early, still rudimentary, but data management capabilities. In turn, that has a bunch of knock-on effects. One of the most important is the bank that is able to and allowed to use data and use data effectively will be better equipped to identify and act if we don't have another crisis, right? I would be very thankful if this, of course, was in the rearview mirror in a few months. I think we're all hopeful for that. But whether that happens soon or in the longer term, it will put you in a position where you can then be better equipped to help customers in their everyday lives if there is no crisis and during crises. And it's a little simplistic, right? This graphic is certainly reductivist, but I think it's accurate, or at least the hypothesis is that it is accurate. And I think, everything we've talked about so far, the initiatives and actions you take to help customers, manage their payments, make their payments, or defer their payments, the work you do to ensure that your digital content, that your content is clear, that you're helping them, all of that will make a big difference. And we really strongly believe, I should say this is, again, still a hypothesis, but this could be, have really important long-term effects for the customer and for you. So I want to get a little specific right now in the last little bit of time that we have left, and there will be, I hope, some time for Q&A. I'm going to talk about 8 specific initiatives that we think should and will see increased priority among banks. And I'm going to go through these somewhat quickly because some of them we've already talked through. Alerts and notifications. Forrester did a driver analysis. I won't get into, well, I'll quickly tell you what we did was we surveyed customers, and then we asked a subset of survey respondents if we could put a little bit of software on their phone, with their permission, of course, and watch what they actually do. As a result, we were able to do a driver analysis of a bunch of emotional, that is the brand perception metrics and mechanisms, as well as, actual initiatives, right? The services banks offer, the tools banks make available to customers, the way that banks communicate, et cetera. We found that alerts and notifications were the #1 non-emotional driver of engagement in banking. And when I say non-emotional, obviously alerts and notifications have emotional implications. What I'm talking about is I'm not including things like my bank makes me feel good about being a customer. That's really valuable, right? That's really important, but it's not something you can change through an initiative or a roadmap item, right? It's a much longer slog. It's enabled by specific initiatives like improving the alerts and notification experience, which we know will have a huge impact. Even during a non-crisis, it would have a big impact. We believe it will have even more profound and acute impact now. Secure messaging, we've talked about this a little bit, but firms are sort of charting new territory about what it means to offer two-way asynchronous messaging. Card and data management, so the near-term stuff is the card management, your debit card, your credit card, the ability to turn it off, turn it on, the ability to view card-not-present transactions. Customers don't really know what most don't know what card-not-present is, but help them understand what's going on. That has an immediate need, of course. Yes, customers want to make sure that, because fraud is up, right? Phishing fraud is up. It depends on how you measure it. Actually, it's a little bit complex because spending is down, but this is going to be important. The adjacent opportunity here is around data management tools that help customers monitor and manage their data across multiple platforms. So not just how the bank is using their data, but where, for instance, where their financial information is being used, even if it's not a subscription or a recurring payment or a card, card held at a separate firm. And then search, and we're going to talk about this in a second, so I don't want to get deep, but we'll talk about it in just a moment. So if you go to the next slide. Content, so I think we've actually talked about this, but very quickly, content has traditionally taken a backseat to transactional and service and, frankly, product tools and features made available. Banks have put a lot more resources into transactional tools, service tools, and products than they have to content. That is perfectly understandable. Again, this is not here to say that was bad, but I think we believe, based on our research, that the pandemic has put a spotlight on the mediocrity of most banks' content development and delivery efforts. We think this will change. This will be an area where the firms that do this well will see it will not be the only factor, right? We've already talked about a number of factors, but it will be an important factor. Navigation design, it will always matter. It matters more when people are feeling stressed, concerned, and need to find what they're doing. And by the way, can't easily go into a branch and can't easily make call the call center when wait times are, in some cases, skyrocketing. Contactless payments. So we based this on our convenience quotient research. So there's no question that in the immediate sense, right, contactless payments have a role to play because people don't want to touch things. But we believe that will, for various reasons that unfortunately I don't have time to get into deeply here, but we believe that we will see the acceleration and the amplification of contactless payments adoption and usage. And then the last one here is true digital product innovation. Most banks have done a lot of great work extending their products onto digital channels, but have done relatively little, and then this varies by firm, of course, but relatively little to really think about born digital products that are increasingly, by the way, autonomous, meaning they are automated tools, and they're increasingly embedded in digital ecosystems, so they don't always just live. So yes, I'm talking about Alexa skills, but I'm talking about next-gen stuff like machine-to-machine capabilities or payments with connected cars, for example. That should not be your, that's not going to roll out next Tuesday because of the pandemic, but we're going to see increased priority. So let's talk through a few of these really quickly, and then I want to leave some room. So when it comes to secure messaging, pull into mBank, right? mBank has done a lot of really great stuff, cool stuff, but also great, valuable stuff, and has seen the business results over the long term to prove that. So they offer embedded, secure, asynchronous messaging and a full history of chat. Live chat is available. The use of live chat, and that varies by segment, by customer, by geography, so I don't want to make that the main emphasis here, but that is valuable and certainly valuable in certain use cases, very valuable in certain use cases. And then the customer can move across sessions or channels really easily. So they're doing a lot of great work when it comes to messaging. I'm talking here about two-way messaging, not communication, the way we were talking about earlier, but two-way secure messaging. Excuse me. So if you go to the next slide, our view, and this is a prediction that predates the COVID-19 pandemic, but I think, as you see in my last comment here, ultimately, I think this will be amplified, or see greater urgency. Alerts and messaging need to be integrated with other tools and platforms. So there's a very big silo problem in alerts, notifications, and messaging in banking. It is understandable. It's the way the systems and the technology grew up. But it really needs to change to serve customers better. And the firms that do change that will see certainly greater engagement. We know that from our own research. But I think we'll also see increased knock-on effects like brand perception, brand loyalty, et cetera. We believe the coronavirus pandemic, the COVID-19 pandemic, will move the horizon for this forward by years at, I hope, most banks, but certainly at some leading banks. So if you go to the next slide, we'll talk quickly about search. So I say search, I think it's understandable, but incorrect to think that when we say search, we mean a search bar. That's sometimes what we mean, but we're talking about search as a mechanism here. So in customers' experiences, and primarily in their experiences on digital channels and touch points, search is a mechanism for navigation, exploration, and task completion. And Forrester's research shows that customers are largely agnostic about how you provide this mechanism. So, for example, a virtual agent or a chatbot, if it works, and that's a big if there, but if it works, is a perfectly suitable mechanism for search, right? If you enable customers to find the functionality or content they need, the information they're looking for, and complete their tasks, that's what matters. So a couple of quick examples here. We have 3 examples. If you go to the next slide, please. From multiple, actually, I guess no Americans in here, which I'm from America, if you can't tell by the accent. So, we see this from a couple of different geographies here. But 3 of these are leaders in search. They're not the only leaders. This is not exclusive, or excuse me, exhaustive. But they do a really good job of helping customers search transactions. So that's a specific form of search. Or being able to simply, what we would call universal app-wide search. So on the far right, you can see that from CIBC. And there are best practices, specific best practices in here around predictive search. So when a customer starts to type, you predict based on their context or what you know about most customers in that situation, what they're looking for, right? So, and then you can also see accounting for misspellings, right? So they might accidentally type 2 E's on a tiny keyboard, help them find that functionality or content anyway. So that's really important. So I want to close my time before we get into some questions with a few additional takeaways. So if you go to the last slide here, the last slide of my section, here are some additional takeaways and predictions. None of these should shock you, right? The most important stuff we had to tell you about how banks are responding and what we think banks will do next is what we've talked about for the last 50 minutes. I hope it's been really valuable to you. But these are some additional ones, and they are important. So interpersonal financial needs. So Forrester refers to this as shared finances. We have a couple of reports around it. But I don't think I'd love it if you read those reports because we worked hard on them. But even if you don't read them, the nub of them, to distill them down, people have interpersonal financial relationships. Those needs have traditionally not been met and really not been able to be met by existing financial products. So when I say shared finances, a lot of bank executives say, oh, you mean joint checking accounts or credit cards with multiple cardholders or joint brokerage accounts? And the answer is yes, all of those things are shared finances, but they are pretty mediocre methods or tools for meeting people's shared finances needs. So this involves a wider range of things. And the truth is, this need is about to explode, probably has already exploded in the wake of the pandemic. So people helping their family members or neighbors make a payment on rent or on mortgages. People, divorced parents co-funding education that has now been disrupted. All of these, and there really is a wide array. I mean, we use shared finances or interpersonal financial needs as an umbrella category that covers a lot of different use cases. We believe these are set to explode. I don't think any one bank, even the biggest banks, can tackle all of these and shouldn't try to, but this will continue to grow in the wake of this pandemic. And by the way, I'm sure a lot of you have seen the unemployment numbers, right? The economic impact is starting to be really felt. That's going to only strengthen and amplify this. Number two, many companies, especially traditional banks, but not exclusively, are going to struggle actually everyone will struggle, but traditional banks will have the problem of that struggle will be most severe, are going to struggle to, I don't love using this term, I couldn't think of a better one though when we were drafting this, sort of sort through and identify, assess customers. So the immediate impact of this is going to be creditworthiness of people. I shouldn't say immediate. The one important near term is creditworthiness is going to be really hard to measure accurately in the wake of this pandemic, because there's going to be a bunch of people who may well be able to pay back and have not been financially irresponsible, but that's hard to detect based on what their financial life looks like in the past couple months or right now, just the past couple of weeks. So that's going to be really important. This, again, by the way, the second bullet is one of the areas where data is going to be so important. The last couple, so as lending capacity rebounds, and I do believe in a rebound. I don't know whether it'll be a V or a U or what it will look like, but brand positioning is going to make or break companies. It has an impact on business success over the past 30 or 40 years. It will have an outsized impact in the next, let's say, at least 5 years, and certainly in the next couple of years. And then this last bullet is really what we showed you earlier, kind of an illustration of, which is doing work to help customers and serve customers now in the wake of this pandemic, in the teeth of this pandemic, and then in the wake of this pandemic, is going to drive loyalty, which will in turn drive successful data-driven initiatives. So, AI systems are hungry for more data. You already have lots of data. Your ability to support customers will in turn, we believe, this hypothesis, yield a greater willingness on their part to share data with you and then use the services and the data-driven services that you enable. So with that, I want to stop. I want to say thank you again to Diebold Nixdorf for having me, and I want to see what questions we have, and I'm going to hand it back to Devin, please.
Thank you, Peter. That was fantastic, and really learned a lot. So I've been following the questions coming in. If you have other ones, please do go ahead and use the Q&A feature to send us your questions. Please do keep the questions to topics that Peter covered here today. If you have specific questions for Diebold Nixdorf, we'll be happy to follow up with you following this webinar. So, Peter, one of the ones that I thought was particularly interesting, the banking sector in general has been on this trend to become more agile, more technology-centric over time. And one of our listeners asked, what have we learned in this emergency about, the agility in the financial services sector? And, in my mind, in many ways, this was an absolute stress test of that capability. What are your thoughts?
Yeah, so you and I talked about something. So Forrester uses the term dynamism. We're not trying to change the word, right? I'm fine with agile, but we define it, and we define it as a combination of the degree and speed of change that a company can achieve. And the word "can" there is really important, because the goal is not to just iterate and launch products wildly and all the time with great frequency. The goal is to have in place a systematic approach that enables you to adjust when something happens. And that something traditionally has been, a competitor rolls out a cool new product. Thankfully, it has not in the last few years been global pandemics. But you're right. I mean, I love your terminology. I don't want to over, butter you up. But I think this was an agility stress test, a dynamism stress test. So far, I don't want to sound too, I'm an analyst. I like to have the answers. But here's the truth. I don't think we know yet who has come out. We've seen some indications, right? So Bank of America, their announcement that they are able to put in place those small business loans and stand up what looks like to be some self-service capabilities around that. That's huge. I haven't tested yet though, so I don't know. And by the way, there have been some great small banks that have announced the ability to quickly roll out bridge loans for customers and prospects. So we've learned. Maybe I'll put it this way. We know we're learning a lot about that stress test, but we don't. I think the results are not yet in. And it won't matter, right? Because the stress test then is, okay, you were able to roll it out quickly, but did it actually work, right? That's a true test, and I think we don't know yet. But I agree with you 100%. To the last 3 weeks and the next 6 months, hopefully just 6 months, will be that stress test.
Yep. And another one, Peter, and it's probably too early to know, but what do you think, the COVID-19 health crisis means for near-term IT spending? And I'd say it doesn't couch the time frame in the question, but let's call near term the 3 to 6 month horizon.
Yeah. So here's what we know. So Forrester, we're lucky to work with lots of banks, and I can tell you what we're hearing, and they have no reason to lie to me. They might end up changing things because they have to based on conditions changing. But as of now, I'll put it this way, we have not heard of almost any IT efforts, projects, initiatives, et cetera, that have been stopped as a result of this pandemic. So, and by the way, I think that's probably the right thing at this point. We have heard about certainly some beta testing that will be pushed back. And maybe I haven't thought of this analogy before, but maybe it's a little bit. There's a bunch of experimentation and exploration that looks kind of like events, right? We all know about 10,000 events that have been pushed back to first, usually May, and now to July or August or October or sometimes next year. I think that's what we're seeing. But the near term in it, we have not seen. So a few firms like American Express have announced shifts in how they're going to spend with consultants. But that is, I think that's separate from their in-place IT spending and budgeting, which doesn't look like it's changed dramatically, at least yet.
Mm-hmm. Got it. And here's one that I'm particularly interested in. So this question is about the small medium business segment, and that's a segment that for many financial institutions is stuck somewhere between retail and commercial banking. They've got some very peculiar needs in terms of how you authenticate, small business employees that aren't the business owner, et cetera, right? They have a number of specialized needs, and they're probably one of the least automated segments. What are you seeing in terms of, how banks are handling small, medium business transactions, in the wake of having to, close or decrease branch hours in almost every location there is?
It is one of the most disrupted and I don't use any swear words, but sort of it is where banks are struggling, an area where it might be the area where banks are struggling most mightily, right? So right away, when we talked about branch closures, that's one of the things, right? Small businesses need cash. Now, a lot of small businesses sadly have had to close or temporarily close, some permanently, but right now most temporarily, because they've been ordered to by governments or because they felt it was the right thing to do, understandably. So that changes their immediate cash needs, right? Their day-to-day cash needs, but doesn't change. It actually heightens and only worsens their cash flow concerns. So, I honestly, so we've done a little bit of this research. Banks are trying to find ways to stand up new delivery models for small business banking services. but the most important word in in the sentence I just said was the word try. Most are struggling mightily here. And it's one where, unfortunately, if you, the bank, hadn't done a fair amount of work on the underlying systems and infrastructure beforehand, it's very difficult or impossible, or I should say, impossible, to enable that now. So I know I'm sad to end on a pessimistic note because I know we're at time, but that's what we're seeing, and it also does change. I mean, small business banking was one of the areas where we were seeing the most disruption and interesting work from disruptors. That throws all of that. It doesn't change that fact, but it throws a lot of it up there because some of those fintechs are going to struggle. So we'll see.
And thank you for that, Peter. And I think maybe to close it on a positive note, you had a line in one of your slides that I really, really liked, which was that if anything, this advances the horizon by years, right? And, maybe this is a catalyst that really does drive automation in the small business segment. So let's look at the upside as well.
Yeah, and I think that's a genuinely reasonable optimism to have. I'm not trying to wordsmith you here, but I don't think that's crazy at all. And I'm hopeful. Let me say it that way. Maybe I'll replace optimism with hope. Perfect.
Well, thank you, Peter. Much appreciated. For all of our attendees, thank you very, very much for your participation. We're looking forward to continuing to help further this conversation, bring you content that helps everyone now navigate the challenges ahead of us. So please do let us know if you have additional questions, if there's other ways that we can assist and support you. We stand ready to do that. And thank you for joining us today. If you need additional resources, you can go to dieboldnixdorf.com/COVID-19. And on your way out, please answer a few quick survey questions so that we can help bring new content to you in the weeks and months to come. Thank you all.